Hey everyone, and welcome back. We're diving into part 3 of our crypto trading tutorial for beginners, and today we are talking all about support and resistance. Seriously, if you've ever stared at a chart and thought, why does the price keep hitting these invisible walls? Well, you're in the right place, because we're about to make those walls visible. Okay, so in the last part, we got you reading the words of the market, right? Those individual candles. Well, now it's time to level up. We're going to learn how to read the sentences, the actual market structure. This is where we start seeing the bigger picture, the whole story the chart is trying to tell us. And honestly, this is where it starts to get really interesting.
So think about it. You've looked at the charts, right? Prices almost never ever just shoot straight up or straight down. It's always this zigzag, this up and down wave pattern. It really feels like they're bouncing between invisible lines, doesn't it? Well, guess what? They kind of are. And today, we're going to show you exactly what those lines are.
All right, first up is support. And the best way, the absolute easiest way to picture support is to think of it as a floor. Imagine the price is falling, and then boom, it hits this floor. It just can't seem to drop any lower. So why does this happen? Well, it's all about psychology. At this price level, a whole bunch of buyers jump in, thinking, wow, this is a great deal, it's cheap. All that buying pressure then pushes the price right back up. It's basically a price trampoline.
Now, if you have a floor, you've got to have a ceiling, right? And in trading, we call that ceiling resistance. It's the exact opposite of support. This is a price point where the market just struggles to push any higher. The price climbs up, hits its head on the ceiling, and gets knocked back down. And again, it's all about what people are thinking. Sellers who bought way down low see this price and think, okay, perfect time to cash out and take my profits. That flood of selling is what forces the price back down.
So let's just put them side by side to make it super clear. You've got support, which is the floor where all the buying pressure is. Then you have resistance, the ceiling, where all the selling pressure kicks in. It's really that simple. It's a constant battle between buyers and sellers. At the floor, the buyers are winning. At the ceiling, the sellers are winning. This back and forth, this tug of war, is what gives the market its entire structure.
Okay, now this is probably the most important part of this whole lesson. This is where we connect the dots with what we learned last time. Remember all those candlestick patterns? Well, on their own, they're useful. Sure, they're like little hints. But when you see one of those patterns show up right at a key support or resistance level, whoa, that's not a hint anymore. That's a massive flashing neon sign. It's a super high-quality signal, and it's something you absolutely have to pay attention to.
I love this analogy because it's so true. Think of yourself as a market detective. You find one clue, say a candlestick pattern. That's interesting, but is it enough to make a move? Maybe not. But what if you find a second clue, like the price is at a major resistance level, and it points to the exact same conclusion? Now we're talking. That's when you can be much more confident. The support or resistance level is clue number 1. The candlestick pattern is clue number 2. When they line up, your odds of being right go way up.
Okay, let's walk through a real-world example so you can see this in action. I want you to picture this. You're watching a crypto chart. For the last few days, the price has been on a tear, just going up. Then it suddenly hits a price where it's stalled out before, a clear ceiling, a resistance level. And right at that moment, what do you see? A shooting star candle forms. You remember that one, right? The classic bearish reversal signal.
So, the scene is set. The evidence is on the table. You've got your 2 big clues. Clue number 1, the price slammed into a known ceiling. Clue number 2, a bearish candle pattern just showed up. So what's the most likely thing to happen next? What's the high probability move here? Think about it for a second.
When you boil it all down, there are really only 2 possibilities here. Option 1, the buyers find some crazy new strength, they just smash right through that ceiling, and the price goes to the moon. Or option 2, the clues are pointing us in the right direction, that ceiling holds strong, and the price gets rejected and falls back down. So, which one is it? And the correct answer is the price drops. It bounces right off that ceiling. This is the perfect payoff for our detective work. See how powerful that is? The resistance level told us, be careful, sellers might show up here. Then, the shooting star candle confirmed it, basically screaming, yep, the sellers are here and they're taking control. Putting those 2 clues together gave us a really solid reason to believe the price was heading down. And that's how you combine these concepts to find powerful trading signals. Now, if you need a daily analysis of the market and useful tips about crypto trading, subscribe to Trade Compass and hit the bell. See you in the next part.